Good morning and welcome to CoreWealth's April 2019 monthly wrap-up, the video version thereof. We sent out the written version a couple of days ago, but we wanted to do the video version once we had a clearer picture of some of the election results. If we have a look at April, it was another good month for equity markets, both locally and globally. We've seen the local equity market rise by just over 4% in the month of April, and is now sitting at over 12% better than it was at the beginning of the year. Global markets have also had a good month, between 2 and 3% up for the month. But again, if we look since the beginning of 2019, global equity markets are up strongly in double digits again. This has been positive for our portfolios, especially the longer term ones, which have more exposure to listed equity and international equity as well. Now, the big question and the big topic in everyone's minds over the last couple of days has probably been the elections. And there's just a few comments around the elections. We've seen the outcome being, we think, a positive one. At the moment, about 76% of the vote has been counted. The ANC is looking at ending up probably somewhere around 57%, which is a good majority. Although in relative terms it's lower than the last elections, it's enough of a majority to give them a mandate to proceed with some of the changes that Cyril Ramaphosa has been making. We think this is going to be positive for the economy. If we have a look at South Africa's election relative to other emerging markets, it's been a very successful one as well. It's been peaceful and the process has been run very well at an overall level, and much better than many of the other emerging markets that we compete against, for example, Turkey, Russia, places like that. This is positive for us on the global stage in that international investors can look at South Africa and see that the process has been well run. Moving on from the elections, if we have a look at what the outlook is for global markets, including South Africa, we're still fairly positive. Although the economy globally has slowed down a little bit, it is still growing quite healthily. And this is just normal. Economies can't grow at massive levels on an ongoing basis. They do go through cycles, but the growth is still positive. If we look at South Africa, we are positive about the prospects for growth, and we think the changes politically will add energy to that. We think there will be renewed confidence after these elections because they've been handled well, and we think Cyril Ramaphosa will continue to make positive changes as he has done over the last year. We think that there'll be an increased level of competence put in at a local government level and at the state-owned enterprises, which should again boost how our economy works and be positive for the environment. If we have a look at the valuations, how expensive shares are on the local stock market, there's still lots of opportunities to buy good companies at reasonable levels, and we think the managers that we use will be able to take advantage of that. And then globally, while the US is looking a little bit expensive, that economy still continues to grow and the companies are able to make profits. But there are lots of opportunities around the world, and that's why we'll use different markets and different managers around the world to take advantage of that and add performance to our clients' portfolios. So as we sit here now, we do think that the outcome is reasonable. We can expect some good growth, we think, from the South African market over the next number of years, as well as other emerging markets which are looking quite attractive from a long-term perspective. And then there's opportunities to be had by different managers in some of the developed markets as well. Japan for us is one that's looking relatively cheap at the moment. The main point that we continue to coach our clients on and advise our clients on is to stick to your long-term strategies. And 2018, as we said before, was a difficult year. But had investors capitulated and moved into defensive assets at the end of December last year, they would have missed out on what has been a really good start to this year. And we've seen the losses that were made at the end of 2018 more than made up in the first 4 months of this year. I hope that's been helpful and given you some insight to our thoughts of both what has happened and what we're expecting for the future. If you've got any questions, please don't hesitate to get hold of us. Give us a call or drop us an email or get hold of your Core Wealth advisor directly. Thanks for watching.